Good morning, my name's Michael Pate. I'm standing in for Paul Kavanagh on the 14th of April for this week's podcast. This week we've got a short week. It's a very heavy week for US reporting for the Q1. So as you can see, we've got Coca-Cola, J&J, Yahoo tomorrow. On Wednesday we've got Google, IBM, American Express. On Thursday we've got Morgan Stanley, Union Pacific. So we'll get a very clear idea of what's going on in corporate America this week. On the UK, we've got the miners reporting, we've got Rio Tinto and we've got BHP Billiton on Tuesday and Wednesday. And we've also got Tesco's reporting on Wednesday and Diageo on Thursday. On the economic side, we've got on Tuesday the ZEW Economic Sentiment Indicator. On Wednesday, we've got US housing starts, and on Thursday, we've got the Philly Fed Index. So looking at last week, we continue to see this rotation out of areas of the market that have done well over the last 16 months and into areas of the market that have been poor year to date. So as you can see from this chart, you've seen emerging markets rally very substantially over the last 10 trading days. And now we're seeing the MSCI Emerging Markets Index actually outperforming the world index on a year-to-date basis. Equally, last week continued to see European bond yields fall. What was quite remarkable last week was the Greek government issued 5-year debt at 4.95%, which is a huge way off where they were in 2012 when that government defaulted. On the flip side, the Nasdaq's continued its downward momentum. So here we're looking at whether this pullback in the Nasdaq has been a technical related event rather than a fundamental event. So here we can see the technicals of the actual index. We look at the RSI, which is the relative strength index. As you can see here, when it gets down to 30, you tend to get a bit of a bounce in the market. We're not far off that level at the moment, so we are looking for some sort of bounce off the bottom if we see any further weakness in that market. In terms of positioning ourselves for potential ideas, as and when that gets to a level we think we should be buying into it, we've been looking at the biotech industry. It's an interesting space. It's 20% off the top. And in order to get our exposure to that area of the market, we've been looking at the funds. So here you can see the Polar Cap Biotechnology Fund, which has outperformed the index, and we've got the IBT, which is the International Biotechnology Trust, which has been poorer than the index. The reason that's been poorer is that it's a trust, and because of the degree of selling in the space, that trust has gone to a far higher discount. So now you're buying that trust at a 25% discount to the asset value of the underlying holdings, which to us looks quite attractive. In the tech side, you've got the bellwethers, Google, Facebook, Amazon, LinkedIn. They've all been poor performers over the last 30 days, as you can see in this chart. And we're going into the Q1 earnings season. It's interesting to have a look at what the estimated revenue growth for these stocks are. Obviously the PEs in absolute terms are high, but you're also looking at pretty high year-on-year revenue growth. So with Facebook, you've got 66% growth, LinkedIn 43% growth. So if you look at these stocks on a PEG basis, they do look more reasonable. They're also businesses with a lot of cash on their balance sheets, no debt, and therefore if you look at the EV to EBITDA metrics, again, they look more reasonable. So we'll be looking at those Q1 numbers, particularly Google on Wednesday, to see how they're giving outlook statements for the next quarter, which will be interesting for the barometer for those stocks. On the economic side, again, we're looking at whether this pullback in markets, in developed markets, been on a fundamental basis or whether it's more of a sort of positioning technical correction. And this week we'll get more evidence to give us a clearer idea of that. So we've got the ZEW German sentiment indicators, which are 350 economists and analysts giving their views on the next 6 months for that economy. US housing starts again this week on Wednesday. Number of new residential construction projects in the pipeline. We're looking for a bounce following a weak weather-related start to the year. And finally on Thursday we've got the Philly Fed. This is factory activity in Philadelphia. Above zero is growth, and again we're looking for a continuation of that growth. In the UK, we still feel that the UK market is pretty fair value. Here you can see the dividend yield on the equity market relative to 10-year gilt that has risen, so we're now around a 1% premium to the 10-year gilt, which historically is very solid, good value. And as you can see here, the FTSE All Shares is maintaining its technical strength, staying above that 200-day moving average. So we'll be looking at that quite closely, looking for a bounce off that 200-day moving average. Should that be the case, we've got a lot of stocks here that have come quite a long way off their 52-week highs. If we look at this list, we've got Vodafone, Glaxo, Sanofi, all 15% off their 52-week highs. Those stocks are yielding 5%, 4%. This is an interesting time to start picking those stocks up. Looking ahead for the Killik covered stocks this week, we've got BHP Billiton on Wednesday. That stock, we're looking for better iron ore production figures. We're also looking for an increase in the oil production, but perhaps a pullback in forecasts for their copper production because of delays at the Olympic Dam. That stock and the mining sector in general has been a beneficiary of the emerging market rally we've seen over the last few weeks. We'll see whether that continues, and here you can see the very close correlation between the mining sector and the emerging markets, and see whether there's some catch up there. Equally, as we said, we've got Google also this week on Wednesday, and finally we've got Union Pacific on Thursday. This is a good barometer of the US economy, looking at freight rates and general economic activity. As you can see from the share price, that economy looks like it's still recovering very strongly. Thanks very much. That's all from me.